Okay, so I want to start with something that genuinely messed with my head a little when I first realized it. I checked my bank account the other day and I had like $43 in it. And I remember sitting there thinking, okay, I work. I spend carefully. I try to do the right things. So why does it feel like I am always at zero? And then I heard someone say something that kind of stopped me cold. They said your bank account is not small because you are bad with money. It is small because the system was designed to keep it that way. And my first reaction was honestly, okay, that sounds like something someone posts at 2 in the morning when they are mad at their landlord. But then I actually started thinking about it. And the more I looked into how money actually works in this country, the more I started to realize that something genuinely weird is going on. And not weird in a conspiracy theory kind of way. Weird in a this is just how it works and nobody ever told you kind of way. So today I want to walk through what I have been learning about how the financial system actually functions. Because once I understood it even a little bit, some things about my financial situation started to make a lot more sense. And some of them honestly made me a little bit frustrated. Alright, so here's where I had to start. I had to actually understand what the financial system even is, because for most of my life, I thought it was just like banks and credit cards and maybe the stock market if you were rich enough to care. But it is way more complicated than that. Think about it this way. When you get paid, your money goes into a bank account. That bank then takes a portion of that money and lends it out to someone else. And that someone else uses it to do something, build a business, buy a house, whatever. And then the profits from that flow into other institutions, investment companies, insurance companies, pension funds, hedge funds, and all of these things are constantly moving money around, lending it, multiplying it, betting on it. It is this massive interconnected web where money is always doing something, always working for someone. The question I started asking myself was, working for who? Because it definitely did not feel like it was working for me. So let me explain the part that genuinely surprised me. Banks are not just holding your money. That would be simple and fine. What they are actually doing is using your deposit as a kind of foundation to create more money on top of it. Like imagine if you gave someone $1 and they used that dollar to justify lending out $10 to someone else. And that $10 comes back and the cycle continues. That is kind of how it works. And the wild part is that for major economies, the reserve requirement, which used to be the rule saying how much the bank actually needed to keep on hand, is effectively 0% in a lot of places. Now, there are other rules and regulations that still limit how far banks can push this. Capital requirements, credit checks, that kind of thing. But the basic principle still stands. Your money sitting in a savings account is not just sitting there, it is being actively used, and the bank is making money off of it. And what are you getting in return? If you are lucky, maybe 1% interest, sometimes less. Meanwhile, the bank is charging other people 7, 8, 9% on loans. That gap is not an accident. That is a feature. And I do not say that to sound cynical. I say it because once I understood it, it reframed everything I thought I knew about saving money. Because I used to think putting money in a savings account was the responsible thing to do. And maybe it still is. But I now understand that it is also the least rewarding thing you can do with it, almost by design. Okay, so here's where I had my first real reaction, which was something like, wait, so what am I actually supposed to do then? Because all the advice I ever heard was save money, build an emergency fund, put it in the bank. But nobody explained that while I am building that emergency fund, a bunch of other institutions are out here multiplying their wealth using money from people like me. So let me walk through who is actually winning in the system, because understanding that helped me a lot. At the very top, you have central banks, which are basically the institutions that control how much money exists in the economy and what interest rates are. They make decisions that affect everything, whether your rent goes up, whether your loan becomes more expensive, whether your job still exists, and you have no say in that. Then you have commercial banks, which is where most of us live. We put our money there, we borrow from there, and the bank makes money on both ends of that relationship. Then you have pension funds, which are these enormous pools of money, like tens of trillions of dollars worldwide, that are being invested in everything from real estate to private equity to hedge funds. And the people who actually benefit from pension funds are often not the young workers paying into them. They are the retirees, which is fine. That is how pensions work. But it means if you are in your 20s and broke, you are paying into a system that is not going to pay you back for 40 years, while the fund itself is generating returns right now for institutions that are already wealthy. And then you have mutual funds, hedge funds, investment banks, private equity firms, venture capitalists. All of these things are stacked on top of each other in this hierarchy where the more money you already have, the more ways you have to make more of it. A hedge fund, for example, is only open to people with at least $1 million in net worth. So if you do not have $1 million, you are simply not invited. The best investment vehicles are reserved for people who already have wealth. And the everyday person, they get a savings account with a fraction of a percent interest and maybe an index fund if they have done their research. And that is not a conspiracy. That is just the structure. But here's the thing that really got me. 70% of Americans believe the system is rigged against them. I saw that stat and I was like, okay, so it is not just me feeling this. This is almost everyone. And I think the reason so many people feel this way is not necessarily because someone is sitting in a room plotting against regular people. It is more subtle than that. It is that the rules, the structures, the access, the opportunities, they were not built with people starting from zero in mind. They were built by people who already had capital, and they were designed to reward people who already have capital. So if you are starting from nothing, you are not playing the same game. You are playing a harder version of it with fewer tools. That is the realization that hit me the hardest. And it was not a fun one. But here is where my thinking started to shift a little bit, because I do not want to just be someone who understands why the system is unfair and then does nothing. That feels like the worst possible outcome, understanding something and then being paralyzed by it. So I started asking a different question. Not is the system rigged, but what do people who understand how this system works actually do differently? And the answer, as far as I can tell, is that they stop being a passive participant. When you keep all your money in a basic savings account and you never think about where it goes or how it grows, you are basically just feeding the system. Your money is being lent out, invested, multiplied, and the profit from that goes to the institution. You get almost nothing. But when you start to understand how money actually moves, you can at least try to position yourself differently. Now, I want to be really honest here because I am not rich. I do not have a lot of money to work with. So when I hear advice like invest in real estate or put money in hedge funds, I know that is not where I am. That is not my starting point. But what I can do is at least understand the basic principle, which is that money that is just sitting still is losing ground. Inflation is eating at it. The bank is using it. And the only person who is not benefiting from it is me. So even at a small scale, the mindset shift is this. Instead of just saving money in a passive way, I should be thinking about how to make my money do something, even if it is just a little bit. An index fund is the most accessible version of this for someone starting out. You are not getting into hedge funds, but you are at least participating in the market in a small way. And even that small shift, putting $20 a month somewhere that has the potential to grow, is you stopping being fully passive in a system that profits from your passivity. I want to be clear that this is not me saying go put all your money in the stock market or take risks you cannot afford. I am not qualified to tell you that. And honestly, my own financial situation is still pretty rough. But what I am saying is that understanding why the system works the way it does changed how I think about my relationship with money. Because before, I kind of assumed that being bad at money was a personal failure. Like there was something wrong with me specifically. But now I am starting to see that when you grow up without anyone teaching you how money actually works, and then you enter a system that is incredibly complex and mostly benefits people who already understand it, struggling financially is not just a personal failure. It is actually a pretty predictable outcome. That does not mean you just give up, but it does mean you stop blaming yourself as the only variable and you start actually learning how the system works so you can at least make better decisions within it. That is kind of where I am right now. I am not trying to beat the system. I am just trying to stop being completely at its mercy. And the first step for me was just understanding it, because you cannot make better decisions about something you do not understand. You just react to it and hope for the best. So what am I actually doing with this? A few things, and they are pretty small, but they feel meaningful to me. One is that I am paying more attention to where my money sits. Not just that it is in a bank, but what that bank is actually doing with it. Two is that I am slowly learning about index funds and low barrier ways to at least get some exposure to the market, even with a small amount. Three is that I am starting to pay attention to interest rates, not in like a financial expert way, but just enough to understand when borrowing money is going to cost me more and when it might cost me less. And four, honestly, is just continuing to learn, because every time I dig into one of these topics, I realize how much I do not know, and that used to feel overwhelming. Now it just feels like the work. There is this phrase I keep coming back to, which is that systems built by people can be changed by people. And I think that is true. But I also think the first step is understanding what the system actually is, because it is really hard to push back against something you cannot even see. And for a long time, I could not see it. I just lived inside it and felt the effects of it and wondered why nothing ever seemed to add up. So that is where I am at with this one. Still early, still figuring it out, still starting from pretty close to zero. But at least now I have a clearer picture of the actual game that is being played, and that feels like it matters. For the next video, I want to dig into something that came up while I was researching all of this, which is the idea of compound interest, because I have heard it called the eighth wonder of the world, and I have also heard people say it is completely useless if you do not have money to begin with. And I want to think through whether that is actually true or whether that is just another thing that sounds good but does not hold up when you actually look at it from a starting point of almost nothing. So if that sounds like something you want to work through together, stick around. I will see you in that one.